Hello everybody, welcome to this weekly market analysis webinar. Apologies to those who were looking out for this yesterday. We are actually a day late on this one. Better late than never, I hope you'll agree. So usual format, we're going to cover the major currency pairs alongside the associated sort of macro, politically, especially political, economic events surrounding those currencies. We'll also delve into the stock indices as well as commodities and any other particular instruments that you would like to hear about. Please leave some comments and we can get back to you for future webinars. So let's jump over to the trading platform. So we'll start off with good old euro dollar. So finally we've had some decent action in the euro. Not entirely out of the woods yet, but we've basically broken through this key support area that's been holding us up for a while, which was namely 111, but it started to be 110.5. And now we're through the key 110 psychological level right here. But as I say, it had been 111 that we're really struggling. And if we pull out to the weekly chart, we can sort of remind ourselves what's going on here. It's been a slow descent over the past few years. And potentially, I mean, what you'd expect with a kind of slow descent is a surge of volatility to the upside. But while the trend is still down, my inclination is to expect it to keep going down. Now you can look on this weekly chart, and we've mentioned this on a few occasions, that actually 109, as we're probing right now, were some peaks back here before we started trending higher. And you could take that down as far as 108. So the 108 to 109 zone, potentially having been resistance in the past, will be some support in the present time. But nonetheless, as I said, because 111 had been holding us up for so long as support and we've broken it now, my inclination is to think, well, at least let's expect a decline down to that 108 as part of that longer term support. And so given the declines that we've seen in the last week or so, namely as a result of some pretty dovish commentary from the European Central Bank, talking down the prospects, talking up the prospects of cutting interest rates in September. The new head of the ECB, Christine Lagarde, seems pretty in favour of looser monetary policy all around, and so you would imagine that down the road there's going to be more QE from the ECB. Some people even saying in September, which would obviously be a big source of bearishness for the euro. I don't think it actually will happen in September, but we're getting a little ahead of ourselves for that. There's still room for a bit of a further dip in the euro as we move into that meeting. And then potentially a short covering rally if they disappoint at the meeting. But let's deal with that when we actually come to it. As the trend would dictate, I think we get a little push, maybe a little false break back through 110 potentially. And I don't think we get as far as 111. Which was that kind of key old support, although we could. I tend to think probably 110.05 might be the kind of area where we roll again and start probing towards first 109, obviously, then towards that 108 key level. So as the British pound today, a notable day in that we broke through the 120 key psychological level. So you can see downside psychological levels being taken out in other currencies apart from the dollar. So some broad dollar strength going on here, generally acting as a safe haven currency. People going into the dollar when they're fearful of what's going on abroad. So that all being, and you could argue that the Fed are not being as dovish as these other central banks, is what we've been saying for a while. They've got, even if they were going to cut rates a few more times, necessarily the Fed aren't going to be as dovish as other central banks because they don't have to jump straight back into QE straight away. But this 120 level is key. At the moment, as this daily candlestick looks, which obviously has not closed, but if it did close something like this, then that would actually be something of a false breakout, and you'd be potentially looking for moves to the top side. I'm assuming that this downtrend resumes. We did get this little period of strength here where, this was obviously the downtrend. We did get a breakout through this zone, but as I suspected, we did roll over and we basically ran into that 20-day moving average and just dropped down with that with a pretty clean trade. Double top at 123, just below the 20-day moving average, dropped down to the previous low. That's to make a tidy 300 pips. So that's pretty good stuff in terms of clinical forex trading. I tend to think that the most likely scenario, given all the Brexit uncertainty, is that we probably head down to 118. I may be about to eat my words because tonight, filming this a day late on Tuesday, tonight there's a big vote in Parliament, and MPs are voting to try and see off a no-deal Brexit. The attempt is not actually directly going to work, probably, even though if they get enough votes and pass the deal, it still means that probably Boris Johnson won't go to the EU and ask for an extension. What he'll do instead is call for a general election. And when you've got the prospect of a very anti-business Labour government and all sorts of potential political upset resulting from a general election, I think probably traders go with the uncertainty aspect and the possibility of the anti-business Labour Party taking over government in the UK, and they look at that as a bearish thing rather than, well, actually a general election could be the first step towards a second referendum and cancelling the first Brexit vote, which in an economic sense you would imagine would be a pretty strong positive for the pound. Significance of these levels, by the way, on a longer term chart is that this was the flash crash. So my theory for a while been that the flash crash was interesting because it pretty much flushed out where all the longer term players think there's value in the British pound. So it starts where we currently are, around 120, and it goes all the way down towards not quite parity, but 105, which would obviously be quite mad to hit 105 against the dollar, but I don't think we get below those levels again. So at some point we find a base, I think, above 105 for a big long-term bottom in the British pound, but probably we're not hit there yet, given all the uncertainty in the short term. Dollar yen. So given my expectation of further dollar strength in the other pairs, it wouldn't really make sense to be going short dollar yen, although that would be a helpful hedge. But actually, the way I see this is we've got this kind of downward sloping trend line here with a bit of a false breakout below the key 105 psychological level. And not that I put a lot of stock in this, but a bit of divergence in the MACD. So we put in a higher low in the MACD, but we put in a lower low in the price. So a positive divergence there, potentially indicating not a reversal in trend necessarily, but a little break to the top side. I think we probably hit that 107 resistance a bit, dip down a bit, and then maybe rally up to these previous highs at 109. But let's see. The trend is still down, so it's not an ideal trade. We could just whipsaw above 107 and drop again. So I think if we do push through 107, then we fall back below this trend line, and then the upsurge up to 109 doesn't look too good. But while we're above that trend line, then this potential scenario, which has not at all started to play out yet, but if we get that break, that's what I'll be looking for. Want to mention dollar CAD. If you remember the last webinar I did, what I was looking for is basically this area to hold. We've got the break, a fairly confident looking breakout today, but still nonetheless I'm still feeling like this longer term situation might eventually play out, which is this big rising trend line. We hit the top of the trend line, maybe 133 doesn't work, maybe it's 134 that works, which was that previous peak over here. So maybe that's the level in which we roll back over in dollar CAD. I think if we go through 134, it'll be a bit late for going long the market, but it would be enough to sort of make me to think, okay, actually maybe this was just a little false break lower and a dip, and we're actually heading up higher in dollar CAD. Okay, let's switch gears to commodities, since that's what I see next. Okay, this is gold. Obviously a pretty massive uptrend taking place in gold. Worth mentioning, by the way, maybe you've heard this already, but the gold is in record high territory against the British pound, against the Japanese yen, against the Swiss franc, against a number of currencies. The euro, I think, I have to double check that, but certainly against the Aussie dollar, Kiwi, a few others. Just not against the dollar yet, because the dollar's strong. But we've hit this key level. We mentioned 115.35 a while back as resistance area. 115. I think we said exactly this area. 115.35 to 50 is what we said was probably our target to the top side, and we've stalled out here. Reason being is that we pretty much it's this long-term former support, now resistance. So there's a good chance that at least in the space of maybe a week or two, and it already has to some extent, that this resistance works. So 115.50 works. But for the time being, the trend is up in the short term, and I'm certainly aware of that that area. And it kind of plays out pretty well for what we've seen in the price action on the shorter term. You could see that going back to the longer term again, I was basically using the lows and the closes of these monthly candlesticks, and those levels, which are roughly 15.35 to 50, play out pretty well down on the daily candlestick, where we ran into that first, pulled back to 1500, held that pretty well, ran up to 1550, the round number, pulled back to the old high, which was also the lows in that longer term scenario. And I think we're still looking bullish from here. So my expectation is we just keep on trucking up towards the 1600 level with a breakout to new multi-year highs in gold against the dollar. But we'd certainly open to the scenario of if we are going to go through a more risk-on period, or at least anti-gold period, then I'm trying to draw some kind of trend line through here. I don't know if this particularly works, but basically down through that through this key area here, you know, if we get something more like, I guess this is what I originally was planning to actually draw, if we get a drop down through it with a few closes, then potentially we move down to 1450 again for a little correction first, before then again resuming the bullish action. But for now I'm assuming we stay bullish in the short term. Brent crude, kind of the opposite. This is our daily chart, and you can see that it's basically between 59 and 61, which obviously the middle of which is the key, is the round number is 60. We came down there, made a base, tried to bounce up, but this don't always use trend lines, as I say, but this down trend line working pretty well at the moment. Had 4 touches on it. As of after the last 4th touch, we came down to 56. We've rebounded up to 61 again, just above these previous lows, but into this low. And it looks like as of today, we're pretty much coming down through 58, which had been this kind of short-term level of support for this little range-bound area that we've been in. So if we dip through there and get any kind of rebound up towards 58, then you know, if we kind of, you can see how well this 58's been acting as support. So if we close through there, any little pushback up towards 58 should I think open up a move below 56. And actually worth mentioning that on a kind of longer term basis, we had that big push lower, broke a multi-year uptrend, push lower, rebounded to the 61.8 fib level and the 75 round number. And I think it would be natural enough if we came down and we just retested the low down at 50. But let's see. Over to the indices, start with the UK. Bit of a tricky one in that obviously a bit of a crisis going on in the UK, but a weak pound is actually good for UK multinationals who don't get most of their business from the UK. So you'd naturally want to sell the FTSE, you would think, in the case of some domestic crisis in the UK, but oftentimes it works out the other way in that the multinationals are barely affected by wherever their UK headquarters happen to be, which is the UK. They're affected by, more like their major businesses in the US or China, or the rest of Europe, wherever it may be, which you could argue Brexit does affect. But nonetheless, the FTSE 100 basically been holding up as the pound's dropping, not doing super well, but nor are other global indices especially. 7,300, we're getting a bit of weakness today off there. I tend to think that we have based out of this what is proven to be a very stubborn level of support. I think this rebound gets a bit higher towards the 7,500, which has proven to be quite an interesting level in the past. And then we dive down for another retest of this level, potentially lower, but given the fact that that would be about 500 points in itself, that would be a tiny little trade were it to work out. Here is the German index, the DAX. So you can see we've broken to the top side of this range we've been in, and potentially inverse head and shoulders here. So if this is an inverse head and shoulders, what you can do is take the height of the pattern, which I'm kind of doing a bit of in a conservative manner there, and then project it from the breakout, and then you get your target level on the top side over here somewhere, potentially 12,400, something like that, as a top side breakout target from this range. I tend to think actually we've bumped into 12,000 and we're not going to get much beyond it, and we drop back below. And if we do drop below this range level, so now would be a bit early to do it, but if we do basically fail in this pattern breakout and we're back below the neckline again, then that opens up a drop lower. So kind of two scenarios actually to look at here, depending on how prices close, I would say, around the 11,900. No, well, not really 900. 11,50. 11,850 rather. That's kind of the level we want to be watching for, where the Germany 30 closes, in my opinion. Last but not least, let's finish with Wall Street, our proxy for the Dow. So the market kind of played out as we said in the other webinars, that it looked like we were getting double bottoms and triple bottoms in these indices, and we've had a little rally up. That's what we said before, so now it's a matter of whether we actually get that drop we were suggesting before. We certainly may not. If we remind ourselves of the general situation, long-term picture, we're trying to kind of break out through this 27,000 level in the Dow. And if we do, that's big time bullish. You could say that this has been a kind of secular bear market through here. And if we get the final breakout and take out into record highs, then that's really the next leg of the bull market, and we could be on for hugely higher prices. But for the time being, I'm assuming that we roll over from that 27,000 level for a deeper correction, and we'll know soon enough, because we've broken. Again, we might get a similar scenario as to what we were talking about in the DAX, where we get maybe a little bit of a push where we've already had here, and then eventually drop back down through the neckline. So maybe something similar here, push up, and then we fail to deliver on this triple bottom pattern, which would kind of push up into record highs. We actually roll over. But let's see. If we do close above 27,000 again, then it's looking distinctly more bullish. Okay, I think I'm going to leave it at that. Thank you very much for watching today, everyone. Good luck with trading for the rest of the week. It's Jasper signing out.